Thursday, April 6th, market analysis, Stan Ehrlich. Good morning, 9:39 California time. We have something very, very interesting at the moment. The S&P 500, I normally start out with the stock market indexes, and in particular the SPDR, SPY, which is obviously very relevant to the E-mini and the micro E-mini. So comments for all of them. Early this morning, we got a little bit below yesterday's low. Now, let me backtrack for a second. Remember, we had on Monday, Tuesday, we had a bearish engulfing ER sell signal in the S&P 500 and the DIA, and of course the E-mini and the micro E-mini. All of them official red bearish engulfings, which so far has not had a problem. But this morning, we did get below yesterday's low for a new low since the sell signal, and we turned around at the moment. We have been able to get just a little bit above yesterday's high, which creates, at the moment, a bullish engulfing ER buy. Well, no, it's not. I'm sorry. Just simply a bullish engulfing. We never got oversold, so we're not in the position to have a green ER buy signal like October 13th, for example, which was a whopper and a blatantly obvious major bottom. I screamed bloody murder at the time. Don't trust what I'm telling you. Go listen to the videos. Go watch them. October 13th. So we have an outside up day at the moment, but how much higher are we? 1.33. Nothing to speak of. Also, a few days ago, we had a major sell signal that should cause the market to come down and close gaps at lower levels. Not a lot lower, 10 points, maybe 12 or something lower than where we are right now. That's a very substantial big down day only a few months ago. Lately, things have calmed down quite a bit. Average 2 range has been shrinking a bit. Now, what happens if we stay here? I really don't give this outside up day much credence. The bearish engulfing and the overbought condition the previous day and the day of the sell signal are more important to me. And I think we're still in an area of a good potential short sale right now, 408.90. If we sink some and we start closing below yesterday's close, well, we'll have another outside down day. It'll be a bearish engulfing on top of the one we had on Tuesday. And it'll be very bearish because it will also turn red. We have another bearish engulfing within the allotted time. That's a little bit of a family secret recipe since the overbought conditions. So I could get a second red sell signal here today if it only will close lower than yesterday's close. And again, we are literally up 1.33, 1/3 points. It could slip easily that in 10 minutes. Maybe even less. We'll see what happens. An outside up day, as long as it doesn't get too strong. In particular, my fail-safe is above the high of Tuesday, which is the bearish engulfing ER red sell signal. And if we get to that yellow dot, 411.93, I'm out. I'm wrong. We lost a little bit. Back to the drawing board and look for the next trade. But the long-term bull market is still there. I just think that we're going to have more of a correction to close some gaps. Spent a lot of time on the SPDR here this morning because it's a little tricky, but I needed to. And the DIA has not yet gotten above yesterday's high. It is in a very similar situation, almost identical to the SPDR. So even if the SPDR made a little bit new highs, that would allow the DIA to maybe make a higher high than yesterday's high and turn back down. I'm still looking at that likelihood. And then we'd have two of them having bearish engulfings if they closed in both cases lower on the day. And that's on top of both of these, DIA and the SPDR, having bearish engulfings on Tuesday to begin with. The QQQ is not quite the same in this case. It did get overbought for 3 days. It did top out, and it's just dropped off a lot more quickly. And then it's bouncing some today. Yeah, pretty good bounce, But right now, as a matter of fact, it's up against the previous opening and a little bit higher or lower than a couple of closes. I meant lows. So it's nowhere near giving me any reason to believe it's going to make a new high for the trend. So all three of them look like they could peter out pretty quickly or easily. In particular, the spider would be fantastic if it gives me another sell signal. The Russell 2000 is simply at a huge major long-term support area. I haven't talked about it lately, but look at these lows way back in May of last year. And then you have the two lowest lows in June and October. But there's another two lows, one in December and one just recently in March, that are in the same area as last May. So you have a support zone about the low 170s down to about 162, 10 points, give or take. That is fantastic. That's a whole year and 5 different points, 3 on the high and 2 in the low. This is bottoming out big time. If we make new lows on a closing basis for a few days on the Russell 2000, whoops, that would be very, very, very bad. But this looks good from a long-term standpoint. Need to get above 180 on a closing basis to start to confirm this particular low we have right now over the last about a month. Okay, enough about the indexes. Covered them pretty good this morning. Futures, we got some brand new stuff happening this morning. Very important stuff, in particular, interest rate futures. The 10-year notes on my first chart here is trying to get into new high ground on a closing basis, which would be construed as a major upside breakout. Now, by the way, tomorrow is Easter or Good Friday, and we are going to be closing early in most markets. So I'll probably make this recording maybe at 10:30, 11 o'clock California time tomorrow. It's 9:46 at the moment. So this 10-year notes chart, if it goes up, rates go down on a very, very fine-tuned day-to-day kind of basis. This is showing me that the bottom formation, which is probably going to be called a broad double bottom, October through March, for the two major low areas, looks like it's trying to break out to the upside. If that happens, we're going to be going up to about 122-ish in the next couple, 3 months. Quite bullish. Now, what about the next one? And that should be bonds, which it is doing the same thing as you might expect. We are up a little on the day. We made a higher high today than the last several months, half a year, I think. So it's since September. But it has to stay here, and it has to keep going some more, probably tomorrow and maybe on Monday as well. Problem, we just barely got overbought today, just now, a little while ago. So it's turned the daily price yellow, and that's a warning that we might be seeing this resistance area, which we're struggling to pop out of, but it's not popping yet. Maybe it's going to stop it, and we'll end up with a very minor reversal. It'll sink back down again to 131, maybe 130 something. Next chart. Corn. We had a good looking reversal a couple of days ago, and for a day or so it worked okay, and that gives us plenty of time for a small profit on the sell signal for both an ER1 and ER3. Today, it's proven the longer term potentials wrong, and we got stopped out if you were so short, and you shouldn't be if you're using the automated system. So I'm not hurt, but anybody that was sticking around should be stopped out. Now I'm back to being bullish because the long-term trend is up, and it looks like the original buy signal we had a couple of weeks ago right here is doing extremely well if you were still long from that one, which is iffy because we usually don't get out and go short because of a sell signal. We get out from a previous buy because we got stopped out. Our smart trailing stop STS takes us out of the trade. If we are flat and we get a brand new sell signal like 3 days ago, then we would be going short. But we like the trend. The trend is your friend, and this trend is up, and we got a damn good buy signal. And so longer term traders, position traders using the system could easily be and should be long still. Next chart. I'm bullish. This is the E-mini. As you know, I'm expecting it to have an outside up day like this SPY just did, which, by the way, the SPY is only up 1 1/4 at the moment. It's moving slowly, but this is plenty of time to drop off a 1.25 or more, of course. So all of what I just said about the SPY at the beginning still stands for the spider itself, the E-mini itself. Natural gas is staying now below that blue line, which we talked about well over a week ago, a downside breakout. We're not oversold yet. I don't have a problem with the way this is acting. I am still bearish and looking for lower lows. And it's probably now going to stay below that resistance line, which means that's pretty much your risk factor, a little bit above that. Soybean meal, we had a buy signal that didn't work. I'll show you then another day here after yesterday's hitting the STS yellow dots. That took a small loss. There's hardly any way that you could have probably made some money on that signal. Very slim chance. Next, soybean oil. Almost the same commentary here, but we did pop up very nicely the day after the buy signal. And even if you bought it 2 days ago, you had a small chance to make some money. That's kind of iffy. So I'm neutral, looking for a bottom. There is the formation I mentioned yesterday, a possible head and shoulder bottom. That low right there on March 15th is the shoulder. This is the head of the formation. 323 is the date. And today looks like a little bit too far to the right, but still within reason. 4-6 is the date today. If that's a low, and it didn't hit the yellow stop, and it didn't make a lower low than our buy signal, if that's a low, then a shoulder is being made. Otherwise, neutral to bearish because the longer term trend is down, but it's trying to make a little bit of a bottom. Next chart is wheat. Good buy signal a few days ago. Darn thing won't start heading north. Same pattern maybe building in wheat, but at a little bit more appropriate timing and levels, I believe, with a slightly upward slanted neckline. Now, these patterns that are about a month in duration are not an unusual time frame. 1 month is just fine and dandy. 2 or 3 months is also very typical. If you see these formations developing over a full year or more, they don't usually come that big. They usually come as a month or 2 or 3 or 4, and maybe a little larger, but not a year or more. Not that I haven't seen them. I have seen some, and they did work. I've seen plenty that didn't, so I know what to look for when they're not working and when they are working. This is a possible turn only if it starts to head north right away. Next chart. Platinum. No particular comment except, yes, we bought the bottom of all three, gold, silver, and platinum, a month and a half or so ago. This green bullish ER buy signal smack dab on the bottom was February 27th, and it has given us no significant problem since. We just made a day or two ago a new high and a new high close to the trend up. Any particular bull trend line you want to draw is pretty much intact. I like the way it looks. I'm expecting new highs real soon. And we're almost a new high ground already in silver. Silver had a bullish engulfing ER official buy signal on March 10th. And zoom. This has been a really great big up move. We got a secondary buy signal on the way up on a minor dip. That's right. I have a problem with that. I got to check my code, but that shouldn't be there. That should be yellow. That should not be the buy signal. Sorry, error. This sell signal is probably good, but remember, we're not stopped out. This thing has been very strong and heading straight up, and there's no significant lower lows over any significant amount of time here. This is just a great stair-stepping market up, and new high ground probably within a few more days, if not sooner, on silver. Next chart is gold. We got the bottom on the gold market also on an ER green buy signal, and that was February 28th. It turns out to be the first low of a second low, which created a double bottom, but it wasn't a lower low. It came close, and up you went, and we've got another buy signal on the way, and these are problem childs. It shouldn't be there. Okay, so gold is on its way up. New high close, looking extremely good. Next chart, cocoa. Not much to say. Probably going to make new highs very soon. Next, OJ. Wow, very overbought, extremely, getting up in the 90s, which is very rare. Maybe they had another freeze in Florida. I don't know. But this is nowhere to buy OJ. You should be looking for sell signals and going short for a downside correction, probably a little below 260. Next chart. High grade, neutral, not much to say. We got the low or close to it a few weeks ago, but it's going nowhere. Next, sugar, too strong, too quick, too overbought, sell it short soon. Next, corn, sell signal yesterday, brand new one yesterday. Not only that, take a close look here. The little red dots represent our new short sell price, our offer before the opening. It opened a little bit above that. As a result, the or better order at around 651 and a quarter got filled on the opening, which was 652 and a quarter. The high of the day is 652 and a half. We sold short on the opening, a tick from the high of the day, currently 45, and it's not even that close to the low. This is working perfectly in capital letters. So our ER3 has got a great short sale, almost at the high tick on the opening, and exactly what the pre-calculated numbers were. Let's hope this follows through to the downside very nicely. Our trailing stop is already starting to lock in a nice profit. Next chart. Crude oil. Up against resistance, I said a couple of days ago, gapped up, possible exhaustion gap. It's just been going, disappointingly, sideways for the 3 last days, including today. I expect this to come right back down again real quick next week to 76, close this gap, and maybe it'll slip down to the next red support area down below here. 72 maybe. Next chart. Live hogs. Brand new buy signal today as we speak. Miss Piggy is about to get up and run. So we're looking to be a buyer at the green dots in the next few days. ER1 is long because it made a bullish engulfing today, real time. And we'll see how this pans out in the days to come. Hopefully the weeks to come. Brand new buy signal today in hogs. Next chart. Heating oil. Nah, not much to say. Neutral, sideways. We had a buy signal a few days ago in soybeans. A little bit of jeopardy today. We probably made a little bit of money and got stopped out because it was up there for 3 days until it started to slip this morning. So I have to say this is a very mild profit or scratch trade for the ER3, which actually never got filled. The ER1 definitely made some money because remember, we're buying at the moment this has an outside up day. This made a lower low first, lower than the previous day's low. As the moment it got higher than the previous day's high for a bullish engulfing day, we ended up with a green bar, that point real time during the day, and bought it. And so it made good money by the close and then followed through to make a bit more money the previous days and then just flattened out and now started to sink. ER1 made a profit. There's very little ifs, ands, or buts about that. I'm not sure exactly how much. Not too important at the moment. And ER3 just never got filled. We never came back within those dots to buy it. Next chart. And we're back to interest rate futures, the TY in the US. And we talked about that. And by the way, the US may have just punched a minor new high here. Not quite sure, but that's looking pretty good. What can I say? Live cattle had a new short sell signal just a couple of days ago. We sold it a little bit above the neckline, just like Miss Piggy. So both the meats, frankly, are doing this. Actually, Miss Piggy had a buy signal, didn't it? What was it that had a sell signal here a moment ago? Oh, okay, it was a buy signal in hogs, sorry. A little lapse there. And yeah, I don't, we started with, and I've already started to duplicate. You guys have a great day. Talk to you on Friday morning, a shortened trading day.